They called it a restructuring, that's what the email said. Sent at 4:37 on a Friday afternoon, when half the office had already mentally clocked out and the other half were on their second drink at happy hour. Strategic restructuring to align with our Q3 growth objectives. I read it 3 times standing in the break room, coffee going cold in my hand, and I remember thinking, they couldn't even do it to my face. 22 years. That's how long I kept the books for Hargrove & Sons Manufacturing. Not 22 months, 22 years. I started when the company was still running out of a warehouse in Dayton, Ohio, when the founder, the original Mr. Hargrove, a man who wore the same brown cardigan every Tuesday and remembered his employees' kids' birthdays, still walked the floor himself. I was 26, fresh out of a messy divorce, trying to rebuild something that felt like a life. He hired me on a Tuesday. By Thursday, I already knew where every dollar in that company went. I was not glamorous. I want to be honest about that. I was not the person anyone invited to the strategy meetings or the client dinners. I was the woman in the corner office that smelled faintly of toner, surrounded by filing cabinets from 2003 that nobody had the nerve to throw away because I always seemed to find something in them. My job was invisible, the way load-bearing walls are invisible. Nobody thinks about them until the ceiling falls. Mr. Hargrove retired 4 years ago. His son took over. That's where this story actually begins. The son, I'll call him the owner's son because that's the only title he ever really earned, was 34 when he took the reins. He had an MBA from a school I won't name, but you'd recognize, a wardrobe that cost more than my first car, and the kind of confidence that only comes from never having been wrong about anything important enough to matter. He swept in with a consultant in tow, a man I'll call a VP, because he gave himself that title approximately 45 days after walking through our front door, and within 6 months, the place felt like a different company wearing the same name tag. The VP was the one who made it personal. He had this habit of appearing in doorways, not knocking, not announcing himself, just materializing in the frame like he'd been there all along and you were the one who'd walked into his space. He did it to me for the first time in October, 2 years before the restructuring email. I was reconciling Q3 vendor payments, a process that required exactly the kind of sustained, uninterrupted concentration that evaporates the moment someone appears in your doorway. Sandra, he said. He always said my name like it was a complete sentence, like saying my name was itself a form of correction. I'll be with you in a moment, I said, without looking up. He waited maybe 4 seconds. I need the Kellerman account pulled for this afternoon. It'll be ready by 3. I need it now. I looked up then. You'll have it by 3, I said, very pleasantly. That's when it'll be accurate. He looked at me the way people look at old furniture. They're deciding whether to donate or throw away. Then he left. That was the first time. After that, the appearances became routine. He'd come in and ask for things with the assumption that anything I was currently doing was less important than whatever he just thought of. He started ceasing himself on my reports and then sending back thoughts that were mostly just my own numbers, restated with more competent punctuation. He reassigned 2 of my junior staff to other departments without telling me. So I walked in one Monday morning to find that I was suddenly doing 3 people's work with 1 person's hours. I said nothing. I kept doing the work. What I didn't say, and what I maybe should have said, was this: I was the only person in that company who fully understood our accounting system. And I mean fully. We've been running a legacy ERP platform, enterprise resource planning software, for those who've never had the pleasure, that the company had customized so extensively over 2 decades that it barely resembled anything you could find documentation for online. When vendors called with questions, they transferred the call to me. When our external auditors came in January, the lead auditor would stop by my office first, before he did anything else, just to have coffee and get oriented. He told me once, laughing, that I was the human manual for this company. I laughed too. I should have written that down somewhere. The system had one additional feature that almost nobody knew about. About 7 years ago, after a data breach scared the owner's father half to death, we'd implemented a secondary authentication layer on all financial exports and wire transfer approvals. It wasn't fancy, it was a hardware token, small as a thumb drive, that generated a rotating 6-digit code. Every wire transfer over $10,000, every quarterly report submission, every payroll batch, all of it required that code. The old Mr. Hargrove had put me in charge of it personally. He'd handed it to me in a little velvet pouch and said, "Keep this somewhere safe." I'd kept it in the same locked drawer of my desk for 7 years. The owner's son knew the token existed. The VP did not. In the months before the restructuring, I'd started to notice things. The pattern of who was being let go, 4 people over 50 in a calendar year, 3 of them women. And in each case, the stated reason was position elimination, but the position was somehow refilled 6 weeks later with someone younger. I'm not an attorney, I'm an accountant. But I know how to read a pattern in data, and this one was not subtle. I made copies of everything, not because I planned anything specific. I want to be clear about that. I just knew, the way you know when a storm is coming before the weather app says so, that something was going to happen and I wanted to be prepared. I copied the HR termination records. I copied the job postings that went up after those terminations. I put everything on a personal drive and I took it home and I put it in my fireproof safe next to my passport and my mother's jewelry. The token I kept where it had always been. The email came on a Friday in March. My position was being eliminated. They offered me 8 weeks of severance, which, for 22 years, is almost comically insulting, though I didn't laugh, and asked me to return my equipment and badge by end of business the following Friday. I drove home. I sat in my car in the driveway for a while. Then I went inside and I made dinner, because it was a Friday and I make soup on Fridays. I am not a dramatic person by nature. I've cried at funerals and once at a particularly good piece of pie at a diner in Kentucky, but I don't perform emotions for an audience. I was angry. I let myself be angry, quietly, while the soup simmered. And then I started thinking. On Monday, I went in. I was professional. I trained nobody, because nobody asked me to train anyone. Another decision they would come to regret with a thoroughness I could not have designed to better myself. I documented what I could in a shared drive folder, but the documentation was, by necessity, incomplete. You cannot write 22 years of institutional knowledge into a folder over 5 days. You especially cannot do it when no one has identified what specific knowledge they need because no one fully understood what I knew. On Thursday afternoon, I cleaned out my desk. The token was in my locked drawer. I unlocked it. I looked at the token in its velvet pouch for a moment. Then I thought about the email of 4047 on a Friday. I thought about the 2 junior accountants whose names never appeared on any severance paperwork because they were under 40. I thought about the VP appearing in my doorway with my own numbers restated in his emails. I put the token in my purse, and then I walked out. Here's the thing about April 15th. In accounting, there is no more load-bearing date in the calendar. Tax filings, quarterly payroll submissions, certain vendor contract renewals, all of it stacks up around mid-April like a highway interchange at rush hour. The company had handled it fine for 22 years because I had handled it. What the owner's son and the VP had not fully considered in their strategic restructuring to align with Q3 growth objectives was what April 15th would look like without me. I was in Savannah when the first call came. I had taken myself on a small trip, the kind I'd been putting off for years, Savannah, Georgia, because I'd always wanted to see the squares, all those little parks tucked into the grid of the city, like green rooms between the buildings. I was sitting in one of them with a coffee that was not chipped. I want to note this specifically, and my phone buzzed with a number I recognized as our external payroll processor. I didn't answer. An hour later, my old work email forwarded an automated alert. I'd set that forwarding up months ago for unrelated reasons and nobody had thought to cancel it. The payroll batch for the April 15th cycle had failed authentication. 2,300 employees were not going to see direct deposits on Friday unless someone generated a valid token code. I ordered another coffee. The next call came from a number I didn't recognize, which turned out to be the VP calling from his personal cell. I know because he left a voicemail. His voice had a texture to it that I had never heard before. Controlled, but only just. He said there seemed to be an issue with the payroll system, and he wanted to connect and see if I had any documentation that might help resolve it. He said connect and documentation the way someone says words they've looked up phonetically. He ended the call without saying goodbye. I did not call back. By Thursday evening, the owner's son had called twice. The second message was longer. He mentioned the payroll issue and also, sort of buried in the middle like he was hoping I wouldn't notice, a problem with the quarterly vendor payment run. 7 figures in outstanding invoices that couldn't be released because every export from the system required token authentication, and apparently, and this is the part of the message where his voice changed register slightly, apparently nobody had the token. I was eating shrimp and grits at a restaurant on the waterfront and it was very good. On Friday morning, a number I recognized as our corporate attorney's office called. I let it go to voicemail. The attorney said, carefully, that there were some time-sensitive operational matters and that the company was hoping I might be available for a brief consulting conversation. He used the word brief twice. I called my own attorney first. I want to be clear about this, because I think it's the part of the story that matters most and that nobody talks about. I did not wing this. I called an employment attorney I'd found 3 weeks earlier before I even got the restructuring email because I'd seen the pattern in the data and I'd wanted to be prepared. I told her about the terminations. I told her about the HR records I'd copied. She had some thoughts. We'd been talking for a while. I also called a CPA friend who does freelance consulting because I needed to understand what I was actually holding. A hardware authentication token for a privately held company's financial systems. What was the value of that? What was the liability? The answers were, respectively, significant, and none that I could see, given that I had been the designated custodian of that token for 7 years and had never been formally relieved of that responsibility. Nobody had asked for it back. Nobody had asked for it back. Nobody had even mentioned it in my exit paperwork. I drafted a consulting agreement. I did this myself with some guidance from my attorney because 22 years of reading contracts gives you a working knowledge of how they're constructed. The agreement proposed a 6-month consulting engagement at a rate that reflected the current market for senior financial systems consultants, which, I had looked up, was not a small number. It included a scope of work that covered payroll authentication, vendor payment processing, system documentation, and transition support. It included a clause requiring the company to engage an independent HR consultant to review their termination practices over the prior 2 years. And it included, on page 3, a formal written acknowledgement that my separation had been handled improperly and that the company wished to express its regret. Not an apology, an acknowledgement. Attorneys are precise people, and I had learned some of their precision. I sent the agreement to the corporate attorney on Friday afternoon. I attached a cover letter that was exactly 3 sentences long. The first sentence identified the document. The second said I was available to begin the following Monday, pending execution of the agreement. The third said I hoped he had a good weekend. I went and saw the squares again. I watched the Spanish moss move in the wind over the old houses, and I thought about the old Mr. Hargrove in his brown cardigan, and I thought that if he knew what his son had done, he'd have been embarrassed. Not angry. Embarrassed. That felt true. Monday morning, my attorney called me before I'd finished my first cup of coffee. The agreement had been executed, every clause, including page 3. I drove back to Dayton on Tuesday. The office was noticeably different in ways I couldn't entirely name. Something in the energy, the way people moved in the hallways, a kind of low-grade anxiety that had settled into the carpet. 3 people stopped me before I reached my old office to say they were glad I was back. A woman from accounts receivable hugged me. I'm not a hugger generally, but I let her. The VP was not there. I didn't ask where he was, and nobody volunteered the information, and that was fine. The owner's son was there. He met me at the door to the conference room, and he was wearing an expression I'd never seen on him before. Something careful. Something that had clearly cost him something to arrange. He shook my hand. He said, "Thank you for coming back." He said they recognized there had been some significant communication failures and they were committed to making things right. I said, "I appreciate that. Should we get started?" He blinked. I think he had expected something else. An acknowledgement of his graciousness, maybe. A sign we were going to perform the ritual of reconciliation that would let everyone feel better. I wasn't there for that. I was there to fix the payroll system and document the authentication protocols and train a replacement who would actually be qualified to hold this responsibility. I was there to do my job, which I was now being paid substantially more to do on a schedule that I controlled. We got started. It took 4 days to clear the backlog. The payroll had ultimately been processed through a manual override that required approval from 3 members of the board, a process that had taken 2 days and left everyone involved visibly aged. The vendor payments have triggered late fees on 6 accounts, 2 of which required personal calls to salvage the relationships. The quarterly tax filing had been submitted with a 1-day extension and would require an amended correction on 2 line items. All of this was fixable. I fixed it. What I also did during those 4 days was create documentation so thorough and clear that a competent person could run the financial systems of this company without ever needing to call me. Step-by-step authentication protocols. Annotated system maps. A 30-page operations manual for the ERP platform that I had been meaning to write for 10 years and had never been given the time or the reason to write. I trained my replacement over 3 weeks. She was 47, came from a manufacturing background in Cincinnati, and asked excellent questions. On her second day, she caught an error in a vendor contract that would have cost the company $12,000. I told the owner's son. He didn't say much, but I noticed he stopped appearing in doorways. On the last day of my consulting engagement, I returned the token. I handed it to the new CFO, a title they had finally gotten around to creating, which meant I would no longer be doing a CFO's job for a senior accountant's salary. a state of affairs that had persisted for approximately a decade. I handed it over in its velvet pouch, and I gave a little speech about how it should be stored and logged, and how the authentication procedure should be tested quarterly. Then I went to the parking lot and I sat in my car. Not because I was sad. I want to be clear about that. I sat there because I was trying to locate exactly what I was feeling, the way you look for your keys after you found them, methodically. Making sure you have the right thing. And what I found when I looked for it was something that felt less like triumph than like a knot finally loosening. 22 years of invisibility, of load-bearing work that nobody saw or named or valued. And then a few days in Savannah. And then this. The independent HR review, which the company was required to conduct under my consulting agreement, concluded 6 months later. I got a copy of the summary findings because my attorney had required it. I'm not going to tell you exactly what it said because that's not my story to tell in full. What I will say is that 2 of the people who had been terminated before me received calls from the company's legal team, and that those conversations resulted in additional agreements, and that the woman from accounts receivable, the one who helped me, sent me a card in December that said simply, "Thank you for opening the door." I have that card on my refrigerator. I still do freelance work, mostly small manufacturers, family businesses, companies of the size where one good accountant is the difference between knowing where your money is and wondering. I like that work. I'm good at it. I set my own hours, and I take Fridays for myself, and I have, for the first time in 22 years, an office that smells like whatever I want it to smell like. There's a thing people say about corporate revenge stories, about how the best revenge is living well, about how you shouldn't stoop to their level, about how being the bigger person is its own reward. I understand the sentiment. But I don't think that's quite what happened here. What happened here was that I knew what I was worth, and I waited until someone else needed to know it too, and then I let them figure it out at their own expense. I didn't collapse their company. I just stopped holding it up. The distinction matters to me. If you've ever been the invisible person in a room, the one who keeps everything running while everyone else takes credit for the running, you know the particular loneliness of that. You know what it's like to be competent in a way that goes unwitnessed. I hope some part of this story lands in you somewhere useful. Not as a blueprint, not as a fantasy, but as a reminder. The ceiling knows what the wall does. I've thought a lot about what actually happened in this story. Not the payroll crisis, not the consulting agreement, not page 3 with its carefully worded acknowledgement. I mean what actually happened. The mechanism underneath all of it. Here's what I keep coming back to. The owner's son and the VP didn't lose because I outmaneuvered them. They lost because of every decision they had made in the years before I ever walked out that door. Every time the VP appeared in my doorway and treated my time like it had no value. Every time a woman over 50 was let go and her position quietly refilled with someone younger. Every time institutional knowledge was confused with furniture. Old, replaceable, not worth understanding. None of that was invisible. It all accumulated. It just accumulated in a place they weren't looking. I think that's what people mean when they talk about cause and effect, though most of the time we want cause and effect to be faster and more obvious than it actually is. We want the moment of injustice to be immediately followed by the moment of consequence, like a neat little moral equation. Real life doesn't work that way. Real life works on a delay. The things you do to people collect interest quietly, in their locked desk drawers, and their personal hard drives, and their fireproof safes, and then one April 15th, everything comes due at once. What I did, and I want to be honest about this, required 3 things that I had built over a long time. The first was knowledge. 22 years of showing up and paying attention and understanding systems that other people couldn't be bothered to learn. That's not glamorous. It's not the kind of thing anyone congratulates you for at happy hour. But it was real, and it was mine, and nobody could restructure it away. The second thing was documentation. I saw the pattern before I had a name for it, and I wrote it down. I kept records. I made copies. Not out of paranoia, out of the same instinct that makes you save your work before closing a file. You do it because the work matters and the world is imperfect, and preparation is not the same thing as fear. The third thing was patience. I did not react in the break room when I read that email. I did not call the owner's son on Saturday morning and say things I would have regretted. I sat with it. I made soup. I let the anger settle into something I could actually use. Those 3 things, knowledge, documentation, patience, are not dramatic. They don't make good thumbnail text on their own, but they are the reason everything else was possible. Without them, I would have had a grievance and nothing more. With them, I had leverage, and leverage applied correctly is just another word for fairness, finally getting some structural support. The woman from accounts receivable who sent me the card in December. I think about her when I wonder whether any of this mattered beyond my own consulting rate. She got a call because I opened a door. 2 words she had probably stopped expecting. We're sorry. I know what that costs a person to wait for. I know because I waited for it too, in a different form, sitting in a parking lot in Dayton, trying to identify what I was feeling. If you've been doing invisible work for a long time, I want to say this clearly. The invisibility is not evidence that the work isn't real. It's evidence that the people around you aren't paying attention. Those are 2 very different things. Keep the records. Know your worth well enough to put a number on it. And when the moment comes, and if you've been building quietly, it will come. Don't perform the anger. Just hand them the invoice. The ceiling always knows what the wall has been doing.